Hey, it's me, Jerry Citarelli, and I finally have some real definite news to share. I know throughout this year there's been a lot of stuff with volatility and I guess just breaking news and this and that and the other thing, but really waiting for interest rates has been the one main thing. There's been a lot of economic reports and jobs reports and inflation reports, but a lot of them have been minor and questionable, and things have been going pretty well. As you know, we made some good moves at the beginning of the year to reduce downside and then maximize the upside when things recovered after the tariff talks. And then going into kind of summer, we had some more news that was potentially big that kind of just didn't turn into much. But the thing we've been waiting for is interest rates. And I think I've said it before that I wasn't a huge fan of rates dropping too soon or too much, because I think it is a valuable tool, even though there's been too much focus on it. I do think it is a valuable tool to help stabilize the economy when necessary. And if it went too far, too fast, I think that could have been potentially detrimental because we're not completely out of the woods yet. But there was no surprise. Rates did go down last week. Everybody expected it. There was no real big changes in the markets based on it. Again, because there was no real surprise. I mean, some people thought the rates were going to be dropped as far back as 2023. Where are we? 23. And some people thought they were going to drop 6 times that year. So I think going from that to what we had last week, which was a 1/4 point reduction in the Fed rate, again, no real surprise, so there was no big market reaction to it. But there were some words in the speech that were kind of mixed. I think the Fed Reserve Chair, Powell, did say that he believes inflation is at a place where he's not feeling like it could really go up dramatically. But, there was some optimism, some concerns. But realistically, it looks like there might be as many as 2 more drops this year. Maybe the next one will be another 1/4. Maybe it'll be half. We don't know. But at least we're starting to head that direction, which has built a little bit more stability into the markets. So we're optimistic about the remainder of this year. I'm not going to say we're excited. We're not overjoyed thinking everything's going to be absolutely amazing, because there's still a lot going on. But ultimately, with that rate drop, it is an indication that the Fed does see some stability in our economy, and feels that it'll probably continue moving forward. So throughout all the tariffs, throughout all the bills, and throughout all the changes, things are a little better, I think, a little more stable. And I'm noticing people are a little more comfortable and more willing to spend some money, where before people were holding on to it for different reasons, just in case. So money does drive the economy. If you're not buying anything, then companies don't do well. But as people are getting more comfortable that things look like they're going to be okay, I think people are putting money back in the economy. So the next step, we'll see how we do through the holidays and holiday spending, which is always an interesting one for me. If we spend a bunch of money, then the market will be good. But if we spend too much money, then debt goes up and credit card debt goes up, and that's just another issue. So hopefully there's some balance to it. But if rates do continue to come down, that'll probably ease some people's pain a little bit with the credit card rates. The other thing we're looking at now is there's some immediate activity after that in mortgages and in potentially in real estate. I've talked to a few realtors that said the day after the rates were lowered, they started getting some calls saying maybe we do want to look at a house. But the reality is the Fed rate and mortgage rates are not directly tied. So just because one goes down doesn't mean the other one will. But realistically, it is a leading indicator. So we probably will see mortgage rates come down. I think they did already a little bit, but they could come down more. But if we start to see some activity in real estate, I think that could also spur the economy, because there's a lot of money that's involved in a real estate transaction that passes through a lot of people's hands. Not only the real estate company and escrow companies and other things, but also when people move into a home, there's always some work they do. There's some things they purchase, whether it be furniture, solar, backyard, build a pool. There's money that passes through the economy. So I think if transactions start to pick up a little bit or even substantially in real estate, that can help drive the economy as well. So I'd say right now we're in a pretty good position. We've had a good year. Our portfolios, fortunately, have continued to outpace their corresponding indexes, which is wonderful and what we try to accomplish. So moving forward, right now we're kind of in a bit of a neutral position. We made some big rebalancing changes the other day, just kind of getting ready. We have a little bit of money sitting in cash in the portfolios, again, partially because There's still reasonable interest rates on it, and with the bond portfolio piece, with the piece of the portfolios that's in bonds, those are very interest rate sensitive. So as the rates come down more, we'll probably move some out of there. Or also if we have a surprise dip, it'll give us an opportunity to move quickly into some stocks that are, I guess, discounted, like we did back in April when everything crashed or dipped pretty dramatically. We were able to pick up some deals there. So we're just watching closely. We're feeling okay. I know there's a lot of noise, a lot of news as always, but just know we're on it. We're paying attention to it. We've probably made more changes this year than we have in the past, 2 or 3, maybe even 4 years. So yeah, that's about it. As you know, you can reach me anytime. I'm here in my Orange County, my Irvine office with my surfboard in the background and lounge chairs and stuff. So if you want to come visit me here in Irvine, you're welcome to, but obviously I'm still involved in the Santa Cruz office and going there on a regular basis, and I've seen a lot of you there, and just looking forward to talking to everybody soon before the end of the year. I think summer ended a couple days ago, so enjoy fall. Leaves are going to change soon, weather's going to change, so enjoy it, be safe out there, and if you have any questions at all, you know where to reach me. I'll talk to you soon.